Me too.
7.1 trillion cash on the books at S&P companies. What does that why do you care? Why does that matter?
Sure. Yeah. And I would also just throw out about 1.7. So that would be the cash on the balance sheets of private equity firms. So I think that as we have seen this past year and more so next year, I think that M&A is an ongoing theme. And the 7.1 trillion on the books of the S&P 500, that's exciting. There's debt behind that as well. So I would look at, in this environment where I think the government is a little bit more hawkish around M&A, I think kind of small and mid-cap M&A could get a bid. And, there's less antitrust concerns around that. So I think it's an interesting environment that could send us a little bit higher here, or a lot higher.
Wow. So I'm doing the quick math. It's early 7.1, 1.7. So, okay. So what is that? 8.8. I mean, that's a lot of cash, Josh. You think how much of that is going to go to buybacks? It has already been a record year for buybacks.
Right. And that's a great point. And also it's worth, mentioning that that's an unlevered number. So certainly a lot of debt can be put onto some of these deals. But yeah, buybacks, I think, a lot of management is, they've learned the lesson that M&A it sounds great and it's exciting, but it's tricky. So yeah, we've seen a lot of buybacks and, special dividends and increased dividends. But I think that at the end of the day, size matters a lot in the marketplace in terms of the multiple that will be paid for earnings. And I think the larger the size, the bigger the multiple, the more liquid the stock, and people pay for that dearly.
All right, let's get to a couple of your stock picks that you thankfully brought. We're thankful for that you brought to us, Josh. Talk about size mattering. Penske Automotive Group, one of the biggest auto retailers in the United States. We don't talk about it a lot, but it's big. It's a powerhouse, and it is growing.
That's right. It is. It's a name that I think people are familiar with, but they don't see it day to day as they look around for a car. So I think that it's about an $8 billion market cap, growing nicely, and we know the story of the last 18 months in car sales and the shift toward used, as it's been a little bit more difficult to find a new car. As that abates, though, I think that there's a great runway for companies like Penske. Right now, trading at about 8 times forward earnings. The majority of their revenue is from the used side of the business. So that's interesting. And some global exposure. They sell new and used cars in the U.S. and parts of Europe. They're a big truck retailer. Great balance sheet, cash flow generation. Interesting idea.
And founder, one of arguably the greatest businessmen in global history, Roger Penske, as well. Wrapping up with Academy Sports and Outdoors. Not a name that I am familiar with. Who are they? What do they do? And why do you like them?
Sure. Yeah. Academy Sports and Outdoors, like Penske, is one of the names in our Hennessy Cornerstone Midcap 30 Fund. So it's a retailer of, sporting goods and camping and hunting and fishing gear, about 260 stores in 16 states. And we like it for the reason that we like, Penske Automotive, growth in earnings, valuation, and stock price momentum. I think Academy Sports is interesting, trading also at about 8 times forward earnings. It lives in the shadow a little bit of Dick's Sporting Goods, which, I think a lot of people are familiar with. And Academy is, a younger story, a little bit more room for growth, most likely, and a very compelling idea in an environment where the market's trading at about 21 times earnings.